And welcome in, gang. It is Your Retirement with Insurance 365. We do this once a month on the third Saturday of every month here at 7:30 on News Talk WJG. With the proprietor, Jay Kenobi, is with us here. Angela Cradaville alongside here in Studio B this morning. And we're going to talk about your retirement. Since this program started a couple of years ago, the whole idea here is to pay attention to what's going on, Jay, especially in those last 10 years before retirement. So if you're in that spot, in that sweet spot, 10 years before you want to take life easy and have a little less stress in your life, this is where you have to really dial down and take a look at things and make some moves. So, Jay, some of these moves that you make in those last 10 years before retirement can have some long-lasting impacts, can't they?
Absolutely. You know, I always tell people that the key is to get educated. Let's just sit down and talk about everything. What you do, it really doesn't bother me. It's your life.
Right.
It's your money. And I give that talk, and I get the same question every time, Jeffrey. I give this 3 to 4 minute talk about it's your life, it's your money. I'll take as much time, whether it's 5 appointments, 15 appointments. And then they always ask me, are you like an attorney? How much do we owe you per hour?
Well, you know, Jay, we talked to you about how you really got, you guys are really reinvented yourselves at Insurance 365 because it really is about helping people and getting them on the right track. And do your own due diligence. Go to insuranceagency365.com. Check them out. You can call 402-371-3136. Make an appointment too at 711 South 13th Street. So today, we're going to talk about annuities, Jay, and let's just start at the ground level, and let me ask you, what is an annuity?
Well, first off, it's an insurance product. Okay?
A product.
So insurance product.
Okay.
So it's not a bank product. It's not an investment product. It's an insurance product. So there are multiple regulations, requirements, and due diligence processes in our discussions with you and in your ability to get through underwriting. It's an insurance product. That's why we choose to do it and work with it on a daily basis, because we're an insurance agency. Mm-hmm. Makes sense.
Right.
So a lot of people, when it comes to annuities, we have to start with that and just say, I want you to understand who's backing this. You know, who actually works with us to make sure this is moral and ethical, and that is your Nebraska Department of Insurance.
Mm-hmm. Okay. They'll watch that for you. There are different kinds of annuities as well. So talk a little bit about the differences.
Well, I'll give you the example using Angela here. What I hear a lot is, I don't like annuities. And it's kind of like if Angela said, I don't like Chevys. You have to say, well, tell me more. And she'll say, well, I don't like Chevys. And Jeffrey would say, well, Angela, what kind of Chevy did you have? And she'd say, well, I don't like Chevy Cobalts. And Jeffrey would stop and say, well, that doesn't mean you don't like Chevys.
Yeah, right.
There's many Chevys, right?
Yes, there is.
Annuities are exactly the same way. Annuities, there are multiple kinds. There are multiple triggers. There are multiple riders. They're all designed for a different objective. Unfortunately, what a lot of salespeople do is they just shove you an annuity. And I will have people come into my office and say, well, Jay, I have an annuity and my guy told me it was safe. And I look and it's a variable annuity.
Okay, yeah. How's that doing for you lately?
How's that doing for you? Or, Jay, annuities are boring. I don't like them. I'll say, why? Well, mine just gets 2% every year. Well, that's a fixed annuity. Mm-hmm. And then there's fixed indexed annuities. And so let's just start with some basic stuff as I like to explain. So a fixed annuity is a product that's going to have no fees. They're really popular, Angela, the last year and a half?
Yes.
Yes, lots of people are looking at them now. Why is that? Because the rates have gone up. So in the last year and a half, we can go as high to what, Angela?
5.3%.
Yep. Ooh, 5.3%.
Okay, I like that number.
With no fees. So a fixed annuity, it has no fees, 5.3%, and you put your money away for 2, 3, 4, 5 years. Okay, so people will use that in multiple ways. They can use it for their Roth IRA. They can use it for their traditional IRA. They can use it for their 401k. They can use it just as a product to purchase from a cash position. So a fixed annuity, Jeffrey's pretty boring. It's just, here it is. No fees, 5.3, 5.5, and we'll talk to you in 3 years.
Yeah, I was going to say a fixed annuity right now is really something good to look at because we don't, and we wouldn't look at the markets and go, oh yeah, that's going to be on an upward trend the next 2 to 3 years.
Yeah, and as an advisor, we have to ask, what's your objective? If Jeffrey came in and said, I've got $25,000 and I don't think I'm going to use it in the next 3 years, Jay, that 25, that would be a good objective. Like, I don't think I'm going to use this. I don't see why I would. If I do, can I get it? The answer is yes.
Okay.
But there are surrender charges that we don't want to incur. So let's just leave it for 3 years.
Leave it. Okay.
I'm going to encourage you. Let's do the best we can to leave it for 3 years. So you leave it for 3 years. It grows tax deferred. So you're not paying taxes every year like on your other products.
As long as it stays there.
Yep. And then you can, at the end of 3 years, you make another decision. Do I want to roll it into another annuity? Do I want to take it out and cash it? Mm-hmm. Do I want to take it out and buy a second home? Doesn't matter. But if you just want a place to go, that's a fixed annuity. So that one's pretty simple, straight ahead. Yeah. What ages and what dollar amounts? We can go up to age 90, 95, as minimum of $5,000. So we can do them as low as $5,000.
Okay. I think there's a lot of people out there with maybe, I don't want to call it a pile, but a set amount of money, and they just really don't know what to do with it right now because obviously the bank's not doing much for me.
Yeah. Yeah, it's very and it's an insurance product. It's insured. We put you with A-rated carriers, which means they're solvent, which means to people, if something tragic happens in the economy, floating balloons, I don't know.
Oh yeah, who knows?
But
figuratively, or literally.
So we put you with companies that are A-rated carriers, so they have the financial solvency, and their checks and balance go through the Department of Insurance.
Yeah. Okay. Understood. So different kinds of annuities here. Tax deferred, which we just explained, but then there's that long-term care rider. Mm-hmm. And long-term care insurance has been transformed a number of times, probably in the last 40 years or so.
Long-term care is it's the most changing insurance there is. I'll just say it that way.
Right.
It is the most changing. I've struggled with it because they change the rates, they change the underwriting guidelines, they change a lot of things. They're trying to get it right. Let's be honest. Sure. It hasn't been around as long as...
They look at actuarial science. There's probably not a whole big sample there yet.
Exactly. So you can buy annuities that allow you to have a long-term care rider on there. And this is a great thing. So you can actually have them set up to where they make a lifetime payment off of your premium. So let's give an example. Jeffrey says, here's $100,000. And I turn around.
You'd have to go to my wife for that, but
she gave me 110. Just so you know.
Yeah.
So you don't know about the other 10.
Yeah, probably not.
So that can start you on a lifetime payment, Jeffrey, for you and your wife of say like $5,000 a year. Okay. So now you're getting a lifetime payment like a Social Security payment, right?
Yes.
Pretty nice deal. So you're getting Social Security, she's getting Social Security, and now you're getting an annuity payment. That annuity payment also can have the ability to have a long-term care rider on it. So now when you go in for a long-term care claim, you have the ability to get double indemnity. So now you get, instead of 5, you get 10.
All right. I'm following.
And let's say you stay in a home 7, 8, 10 years. All of your $110,000 plus the interest is gone, and there's no money left in the account. What happens with most financial products when the money's not left in the account?
They pretty much go away.
Yeah, we do a handshake and say thanks for doing business.
Yeah.
There's annuities out there that will revert back to the $5,000 cash position and pay that to you the rest of your life.
Wow. There you go. I think you really have to have a conversation when it comes to long-term care insurance because like Jay said, I think that you set that up perfectly. There's a lot to look at there. and lots of changes, and there are good ways, but there are better ways to handle it as well. So we're talking about annuities and the differences in annuities and just what Insurance 365 can do for you when you take your retirement seriously. This is Your Retirement with Insurance 365. A quick break, and we are back with our second half of Your Retirement on News Talk WJAG. And welcome back to Your Retirement with Insurance 365. Talk to these professionals. Do your homework. Find them online. They've got a great-looking website, insuranceagency365.com. You can give them a call at 402-371-3136. They're located at 711 South 13th Street. Jay Kenobi is in the studio with me, also Angela Cradaville. We're talking about annuities today. And you can really get down into the weeds with annuities. There are different kinds of annuities. And Jay, I think you set this up perfectly at the beginning of the show. In case the folks didn't hear the start of that, annuities are tools. But there are like Chevys. There's a lot of different Chevys. There's a lot of different annuities here. So we've talked about the differences. We've talked about tax-deferred annuities. We've talked about annuities that can bring with them a long-term care rider, and we went down that road as well. Let's talk about variable annuities. And Angela, let me ask you this question. How is it that some people come to your office and they'll say something like, well, Mom had an annuity, but when she died, we never got anything. What's going on there?
Yeah, that probably was, the mother probably annuitized. That's the word you want to focus on. Annuitized her annuity. So what that means is she decided she wanted a payout, but she took the highest payout possible. So if she, meaning the mom, didn't outlive the balance that was being paid to her, so the balance of her annuity, the company would keep all the money that was left in that annuity, in that contract.
Okay.
So annuitized is not the best thing.
Yeah, Jay, there's something doesn't add up about that. How does that work?
Well, it's the way a lot of people still do business. It's basically, Jeffrey, I'll use an example. You have $100,000, and I say to you, Jeffrey, would you like a payment of $1,200 a month? And you say, okay, I would. And I say, okay, Jeffrey, we're going to give you $1,200 a month for your life. Mm-hmm. But when you die, the company gets the balance. The other alternative is we can add a rider on called an income rider, and we can say you get $900 a month or $1,000 a month, but the balance goes to your children. Mm. Some people will take the higher payment.
Hey, the kids are fine. Kids are fine, honey. This is all about us.
Worst scenario I ever saw was a customer came into me, and she was very upset, and I didn't know much about annuities. I mean, I was like 31, 32.
Okay.
I didn't even have wrinkles on my forehead.
Yeah.
And she came in, and I went to the funeral. She came in like a month later. You know, she was an existing customer, and she said, what do you know about annuities? And I'm like, honestly, I've been in the business 10, 12 years. I don't know much at all. She said, they're terrible. And I said, well, tell me what happened. And she had her husband take $750,000. This is back in 2002.
Okay.
And he got 2 payments, and he died, and the company kept the balance.
Oh, $750,000.
And the company kept the balance.
And the company.
And people say, well, I hate annuities. I hate those kind too.
Yeah, those kinds.
Those kinds. And people still do them.
Okay. And so just remember that word annuitization and variable annuities. And I guess we're just living in a time right now where fixed is better. So at least you know what you've got. And quite frankly, the way the markets and everything are moving, mutual funds, all of that, today you're in a better place than you probably will be tomorrow, next month, next year, at least for the next 2 years until something changes.
And there's another kind called fixed index.
Okay.
And that's the most popular kind.
Tell me about fixed index annuities.
When the market when the index of that account goes down below to get a negative return, they credit you 0.
Say that again now.
When the index of the annuity, so where the money's in,
all right,
returns say -6, you get a credit of 0.
Okay.
So it's like playing blackjack with me, Jeffrey. And when you lose, I say, don't worry about it. When you win, I'll pay you.
Okay. That's a pretty good deal. That's a pretty
Pretty good deal.
Somehow
My
connecting
garage tonight at 7. We'll see you there.
somehow connecting blackjack to your retirement doesn't feel right.
Well, we didn't say we were perfect. But seriously, a lot of things that people, the moral of this story is, if you have one, just bring it in. Like this week, I had a lady call me from 4 hours away, and she said, "You're an annuity guy." Her brother in Wayne said he's an annuity guy, and Dad had left a couple annuities. They just want to go through them. They just don't understand how they work. They don't even understand what they have. Yes, we're annuity people because annuities are insurance products. So yes, we do them, and there's nothing evil about them. There's ones that are written poorly, just like car insurance. I mean, I see car insurance where someone gets in an accident, and Jeffrey, they wrote a bad car policy. They had $50,000 of liability, and they killed someone. Okay, that's a really poorly written car insurance policy.
Yeah.
I've seen houses have destruction destroyed, and the homeowner's policy didn't have, the endorsements they needed or the coverage they needed on a $500,000 home, and they get $300,000. So annuities are just like car insurance, homeowners insurance. There are poor ones. They're poorly written. I'm not going to point fingers of where it happens, but part of it is the person that sold it to you not listening. And a big part of it, people, is the person who purchased it not seeking verification on at least every 2 to 3 year basis with a professional. I mean, some people will bring me stuff and they're like, "Hey, I've got this. When's the last time anybody looked at it with you?" He's been dead for about 11 years, and I bought it like 7 years before that. Well, okay, 18 years, I'm sure your objective in life changed.
Considerably.
And so you might have been in the wrong product the last 3 to 4 or 5 years, 10 years.
Yeah.
So it goes on both parties. It's the sales force and it's the person buying it. You have to seek out and say, I mean, I love when people just bring their stuff in and say, "Look through it and tell me."
Yeah.
And 60 to 70% of the time I say, "You know what? You're in a really good position from what I'm hearing from you because I'm listening to what you say."
Yep.
And I also think you have a very good company with a very good product. And they go, "Oh, thank goodness." I mean, they get that pat on the back that they need.
Yes.
Sometimes I will say, this product was for a different objective.
Well, too, and we talked about that. That's a recurring theme here on Your Retirement with Insurance 365 is most insurances were purchased years ago, especially when it has to do with mom and dad are gone, and all of a sudden there's a pile and you don't know what to do with that pile. And you've got to figure it out. And most people they don't want to talk about it because they don't understand it. It makes us feel stupid. But people shouldn't feel like that. You need to go find out. And then all of a sudden, like you say, you tell them, "Hey, this is really good." Or you tell them, "Maybe we should make an adjustment here." But at least you're going to walk away feeling a lot better just because you're going to feel empowered because at least you know. And when it comes to that, there's no stupid questions. The only stupid questions are the ones you don't ask, and then you get yourself in a bad spot because you never asked.
Insurance is like a will. You write it, and then you look back a couple years later and go, "Oh boy,
what did I do?
What did I do?
Yeah, what was I thinking?" Well, at the time, you were probably thinking clearly. But now, like you say, it doesn't fit the objective anymore.
Yeah.
And it goes back to the theme of the show. Those last 10 years before retirement, make sure that you are set up and you have things all ready to go. Because like you said, Jay, this has come up before as well. "Well, I think I'm going to shut her down in a couple of weeks." Oh, yeah. No, I think you got to have a little bit more ready for that then.
Yeah. Yep.
Do your homework and find out.
Yep. And our seminar's coming up here again this month. And February 22nd and 23rd.
Okay.
It's about 80% capacity. The mailings hit last week.
Okay.
And I know we had 4 more this morning. So if you did not receive a invite but want to attend, please just call the office and we'll put you on the list.
Where are these held? What time?
Black Cow, Fat Pig,
Okay.
6 o'clock on the 22nd and 23rd.
All right.
It's a 1-hour retirement seminar.
And you're under no obligation. Come and listen and learn.
Well, you get a good meal.
Yeah, well, yeah.
And we don't even, I mean, people can fill things out at the end if they want to meet with us. If they don't, thanks for coming. Yeah. No matter who I see, it's a connection.
Yeah.
You're going to They might come to you in 5 years later. They'll remember you. So, no, there's no obligation to meet with us.
There you go. Again, February 22nd and 23rd. You can call them at Insurance 365, 402-371-3136. And again, their office is at 711 South 13th Street in Norfolk. Online at insuranceagency365.com. And that is your retirement for this month. You got one more thing, Jay?
Don't just show up. It's reservation only.
Oh, okay. All right. Make your reservation for February 22nd and 23rd. All right. Great talking with you folks again this month. We'll do it again next month on the third Saturday at 7:30 on News Talk WJAG.